Welcome to The Explainer. We're all about taking those big, complicated topics and, well, making them simple. All right, today we're diving into something we all do, probably every single day, without even thinking about it, paying with a card. Do you ever stop and wonder what really happens in those few seconds after you tap your card? It feels instant, almost like magic, right? Well, behind that simple tap is this huge, complex, and honestly fascinating global network. So let's peel back the curtain. Okay, so we're going to start by peeling back the layers on this whole payment ecosystem, right from the very basics. So before we can actually follow the money, we've got to know who's involved. Who are the players and how do they actually make their money? Okay, so it all starts with the card in your wallet, right? And these basically come in three main flavors. You've got your debit cards, which, use funds directly from your bank account. Then there are credit cards, which are basically giving you a line of credit. And finally, prepaid cards, the ones you load up with funds before you use them. Now, and this is absolutely crucial, moving money around like this isn't free. So how do the card issuers make their money? Well, it's from a few places. Card fees, like an annual fee, interest on any credit balance you carry, and this other really important fee called the merchant discount rate. That's just a percentage that the merchant, the store, has to pay for processing the transaction. Yeah, to really get our heads around this whole system, let's just break it down and start with the absolute simplest scenario. Okay, so check this out. It's called an on-us transaction. This is what happens when your bank is also the shop's bank. So that one single bank gets to play both roles. It's the card issuer and the merchant's acquirer. And because it's all in-house, they get to keep all the fees for themselves. Pretty neat for them, right? But of course, that simple scenario is pretty rare. So what happens when your bank is different from the shop's bank? Well, this is where the network really starts to take shape. Right, so when you've got two different banks involved, they need someone to connect them, to act as a go-between. That's where a private card network comes in. And with this new player on the field, a critical new element gets introduced, something called the interchange fee. So what exactly is this interchange fee? Well, you can think of it as the incentive for your bank, the cardholder's bank, to actually approve the payment. It's what compensates them for the risk and the cost of saying, yep, this transaction is good to go. Okay, so now imagine this system with thousands of different banks. It would be total chaos, right? Everyone making up their own roles. That's why, to make this work at a national level, you have national schemes. They basically create a set of standard interchange fees that all the member banks agree to follow. It brings order to the system. And finally, how do we take this whole thing global? Well, that's where the giants like Visa and MasterCard step in. They provide the massive network and set the rules for transactions between banks in totally different countries, creating this truly interconnected global system that we all use. All right, now that we've got a map of the network, let's make this really concrete. Let's track an actual, simple purchase. So let's say you just spent exactly $100 at your favorite store. So the shop owner gets the full $100, right? I mean, that seems fair. But with all those players and all those fees we've just been talking about, yeah, it's not quite that simple. Okay, get this. For that $100 purchase you just made, the merchant only sees about $94 of it. The other $6, that gets split between all the players we've been talking about. The card issuer, the card scheme, and the acquirer. They all take a piece. Now, all this complexity, it can be a real headache for merchants. And, whenever there's complexity, there's an opportunity for new companies to come in and make things simpler. And enter the payment service providers, or PSPs for short. These guys are a real game changer. They offer merchants this one unified service that helps them cut down on fees, takes care of all the complicated tech, and handles all the security stuff. It's like a one-stop shop. And this really illustrates the whole journey we've just taken, doesn't it? We started with that super simple on-us loop, right? Then we saw all this complexity get built up, layer by layer, through private, then national, and finally international networks. And now we've arrived at this new wave of simplification, all being led by these PSTs. It's like the quote says, "The payment network has evolved from increasing complexity to simplification." You go from a simple loop to this massive global network, and then back to a simplified experience for the user. It's a full circle. So the next time you tap to pay, what are you going to think about? The incredible convenience? Or that complex global dance of information that's happening in just a couple of seconds? It's really a powerful reminder, isn't it, that behind every simple action, there's a whole world of hidden complexity and innovation. Thanks for joining me on this explainer.